What's up, everybody? Today we're talking about car payments. That's right, car payments. And we're not going to distinguish if one is a lease or one is a purchase or long-term financing or short-term financing. We're just going to talk about car payments. Like, should you have one? Is it okay to have a car payment? How do they affect your life? And a couple of things that you can do about it. So today we're talking about car payments and how they affect your life for 7 years, 6 years, 5 years, or if you do leasing, 3 years. You know, we always seem to have car payments and we can't seem to get away from them. And all the while, most people you talk to think you should have zero car payments. Like, you should just have your car paid off and drive a car for cash as long as you can. And so there's different schools of thought out there. I'm not here to say which is right or wrong. I know my preferences, and you should have your own preferences for how you spend your money as well. I'm just going to talk about some of them right now, and we're just going to go through them to make more sense of them. So before we get started, let's talk about some facts that I've uncovered after being in the business for over 20 years. So most of you know that people are doing long-term loans on vehicles in order to get the payments to be affordable. And if you ask yourself, why would you do 72 months or 84 months or 96 months financing on a vehicle? Well, let me give you the answer to that. It's one simple thing, and that's to make the payments affordable. Nobody goes into a dealership and says, I want 8 years of payments. You know, they basically want to get a payment that works in their budget. And in order to get it to work within your budget, sometimes you have to stretch out that term, and that's how you get the payment lower. So understanding that, the first fun fact I'm going to share with you today is that the average for people that have car loans, the average length of time that they keep these loans, whether they do a 86-month, 84-month loan, 72-month loan, whatever long-term loan they're doing, the average time they're keeping these cars is 30 to 32 months. 30 to 32 months. So write that number down because it's definitely something to think about when you're preparing to sign a long-term contract on a car. And what that means for people is they sign a long-term loan, they finance in the taxes, they finance in warranties and interest and all these things, and then 3 years later, they're looking at doing something else. And what happens is the vehicle value goes down, they have to trade that car in and get something different, and they end up rolling over a balance. That's why you always hear these horror stories from people when they're talking about, I just keep rolling it over, and you never get the car paid off. And so when we're thinking about that, right, you're like, okay, if I'm always going to have a car payment, if I'm always rolling it over, trying to win this game, one of the biggest tidbits I can give you in this video, guys, is you're not going to win this game. I've tried to figure out ways to win this game for over 20 years, and it's just a losing situation. So the only thing you can hope to do is mitigate it. Write that word down for yourself. Try to mitigate what this is going to cost you, or at least forecast what's going to cost you over 5, 6, 7 years. Even for the folks who pay cash for cars, right? They come in and they buy $5,000 cars, and then 8 months later they buy another $5,000 car, and then 15 months later they buy another $5,000 car. Over time, in that 30 to 32 month time frame, that ends up being about $15,000. And so when you divide the cash that they spent 3 times, you can come up with the monthly payment on that. And funny enough, it's about $416 a month. So when you buy cars for cash at a $5,000 range, you know, Hondas, Toyotas, I get it. People love those cars. They think they're going to last forever. Cars just don't. And so basically, you're still making a payment because once you divide 5,000 by 12, that gives you exactly what you paid on that car per month. And then if you do it again and again, you have to continue to add those numbers, and it compounds, and it compounds really quickly. We haven't even talked about the maintenance or repairs you've done to that car. Oh, by the way, guys, don't forget to like the video, share it with your friends, hit the subscribe button and ring the bell. That way you won't miss a video when we go live or we drop a new one. The other things people are doing is they're buying these third row seat cars and hoping that they last 6 or 7 years, right? So we've got the Hyundai Palisade that's come out. We've got the Highlander, the Sequoia, the Pilot, all these different types of vehicles, right? People want to buy these cars and try to get them to last as long as possible. And I know what they're doing. You know, they've got kids that are growing. Kids always get bigger. They always have friends coming, filling up the car, tearing up the car. You parents out there know what I'm talking about. And basically, you're trying to mitigate how much you're going to spend on this vehicle for 6 or 7 years as the kids are getting bigger and bigger and bigger. And that, my friends, comes with a monthly cost. So it's difficult to do, especially on third row seats, because these vehicles start around $40,000. So they start to go up from there. When you want leather and sunroofs and heated seats and cool seats, those things start to make the car worth and cost a lot more money. So thinking about your payments and thinking about how you're going to tackle this payment is something that you should do before you buy your next car. Recently, I had some folks who were approaching retirement range, and they were considering paying off the rest of their mortgage or buying a $30,000 car. And we spent some time talking about it. We did not lease a vehicle. We ended up talking about getting the 0% financing that was available on a Hyundai Santa Fe. Now, that car does not have a third row seat, but it was around $28,500 for the all-wheel drive version, and they could pay about $500 a month for 5 years, no interest, and pay that car off. In the same breath, they could take the money they had and pay off their mortgage. And these are things I'm trying to get you guys to think about. How you can use your money for your driving habits and not let your cars drive your spending habits. So there's really 3 major ways that you can purchase a car. One way with no payments, that's by writing a check, paying cash with the pen, and have it over with. You just write one check for $45,000. You get a vehicle that's going to last you for hopefully 6, 7, 8 years. Sometimes I've seen people get their cars to last longer than that. That's one way of purchasing them. Just have to remember, guys, that you still have a car payment because that car is costing you something every month when you add in the repairs, when you add in all of the maintenance, and if anything goes wrong. You still have to calculate that stuff into your long-term planning. The second way is long-term financing. So when I say long-term financing, I mean 60 months, which is 5 years, 72 months, 6 years, or 84 months, 7-year loan, which the longer you have to go out there, at some point you have to start questioning yourself and saying, is this the right car? Because we are really stretching this out to make this happen. And so if it's just pushing the budget, you might have to drop the equipment that you're buying on the car to get something less so that you can fit within your budget. And even when you get it into your budget and you have a 5, 6, or 7-year loan, just remember, you may not pay that vehicle off. So making more of a monthly payment on top of the payment that you have would be beneficial to help get the car interest and the actual payoff down as fast as you possibly can. And the last way is leasing. Leasing is just basically a payment forever on a certain car that you pick. They usually last 3 years. You really don't need to lease a car for longer than 39 months or so. But that lets you transfer the risk of any repairs to the manufacturer because those vehicles are always under warranty when you're leasing them. Not because it's a lease, but because of the amount of miles that the vehicle's going to have on it when it starts and finishes. It's usually less than 40,000 miles when you turn those cars in at the end of 3 years. So back to what we were talking about, is it okay to have a car payment? I mean, should you be wary of having a car payment? It's really where you are. There's no right or wrong to it, guys. You can pay cash for a car, buy a $5,000 car. That car lasts maybe 5 or 6 or 7 years. I would think that would be extremely lucky. But if that works out for you and your family's happy with it, that's a good decision for you. Don't let anybody talk you out of it, including me. So, or any salesperson for that matter. If you'd like not having any risk or repairs, you don't want to work on your car, then you might want to consider looking at leasing because definitely the vehicle's under warranty for the whole time you have it. And a lot of these new leases are coming with maintenance included. So it's definitely something you should be looking at. Long-term financing has its place. But it has all good things come to an end. So you've got to figure out how long we're going to have these payments, how long we're going to keep this car. You have to keep reevaluating that every year to see where you are, and maybe that'll work out as well. So I'm not trying to say that either of these things is wrong. It's just doing this thing for cash has gotten so difficult for people that they have to look at payments. So if you like the videos we're putting out, guys, and I hope you do get information from these, don't forget to hit the like button, share it with your friends, and hit the subscribe button and ring the bell. That way you'll be notified every time we go live or we drop a new video.